We have a special edition for you today. This is a crucial video this weekend, setting up for next week as the market has seemingly taken out, or has it, some crucial levels. We're going to be looking at the S&P 500 today. We're going to be looking at the Nasdaq and the Dow, really getting into the equity markets. We're going to be taking a look at whether or not here on the Nasdaq this is a bear flag or a bear trap. We're going to do all that today in this video right now. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. Now, if you're new to this channel, you might think, oh my goodness, his analyst is just overly bullish, right? His analyst is overly bullish. And it has been. It has been ever since the middle of June, when I've basically forbidden anybody from selling the markets. Rightfully so. This has been absolutely technically uber bullish. Has that changed? That's what we're going to look at in this video. Now, just to be fair, it was at the late in February when we began really attacking the breakdown here to the downside, and then all the way through the low over here, started picking up, took about 5 or 6 different trades to get the bottom over here and rode this up. This was the most difficult portion of the whole year to trade over here in April, because we didn't know, I didn't know if we were going back down to test 2,300 or if we were headed all the way up towards 4,100. It was impossible to tell, right? And then once we're able to get this prime trend line in play over here, the one that we have right over here, we've been able to lean off this and keep this bullish structure intact in the markets. Again, rightfully so, but I've always said if we get a big technical break, we'll be one of the first to know, and then we could look to attack to the downside. Did that break happen on Friday? Well, it's not as clear. Before we get into the Nasdaq, which is really interesting, let's start off with the one that is the most unclear. That is right now the S&P 500. You could see the trend line that we have over here. This is our prime trend line, and you could see that price closed right exactly on the trend line itself. Now, whether or not that is a break or a hold, that remains to be seen. We're not going to know that until Monday. Actually, Monday is going to be kind of an easy day to trade. We do know that if we take out the low over here, not just the low, a little bit below, let's call it 3280. If we take out 3280, let me go ahead and actually move up a support line over there so that everyone has it. 3280 is the line in the sand, and below that, we have a big breakdown. We'll be looking to attack to the downside. Jordan, is it possible that we trade sideways from now until the election? And sideways meaning maybe as far down as 3,200. Anything's possible right now. There's a lot of moving pieces. One of those moving pieces, by the way, is the stimulus, right? It's very unlikely right now. I agree here with Goldman saying that it looks very unlikely that any stimulus will occur through the election over here. We do know over here that on Friday, which caused the large sell-off in the equity markets, House Speaker Nancy Pelosi said that she's sticking to the $2.2 trillion stimulus bill demand, right? That was after President Trump said that, you know what, he thought 1.5 trillion was something that was definitely needed. And, you know, they stuck to the higher range. Therefore, there's no deal, right? Now, I don't know the rest of this, whether Goldman is kind of showing where the squid is at or not. It says if Democrats win the White House and both chambers, if there's a clean sweep, we expect them to pass a large fiscal stimulus package, right? Similar to the 2.2 trillion proposal, plus Vice President Biden's longer-term fiscal expansion plans. The printers will be running, obviously, if that does occur. Now, where does that leave us right now? That's what we need to focus in on, right? That's what we need to focus in on. By the way, so far, this is the biggest correction on the S&P. It's about 8% now. About 8%, the biggest correction ever since the March low. Let's take a look at that just so you get a clear picture of what that means. You can see over here that so far that's an 8.2% drawdown. The question is before the election, what kind of sell-off will we need to see before then they would act? Before you would get some, it looks like the Fed has passed the onus onto the lawmakers to pass the stimulus. That was very clear on Wednesday when Fed Chairman Powell spoke during the press conference question and answer. He was mentioning fiscal. We need stimulus, right? That onus is now passed to the lawmakers. You could see, or you should be aware, that it has been ever since August. This is, by the way, when I got neutral on equities, and I was very clear. It was right here the first week of August as we came into our final take profit area. I said equities are very risky. Over and over and over and over again, I've been mentioning equities are very risky. Obviously, that remains very much in place, very much the same. Now, by the way, a drawdown to 3,200 over here in the S&P, that would look like altogether we would be seeing, that's an 11% drawdown. Is it possible we get something like, what would a 15% drawdown look like all the way to 3,000? Is that would be, I think that would be the pain point. I think that would be the pain point, a drawdown all the way to 3,000 in that area. That's when they would act. Now, is that going to happen? Are we going to see the market kind of push the hand of the lawmakers? Normally, the market's trying to push the hand of the Fed, but we'll see. Now, more importantly, I have been saying at these valuations, the markets are extraordinarily risky. There are much better trades out there right now. However, over here, earlier last week, this gave us an opportunity to go long as the support held over here, to go long over here. We had one opportunity. And then again, we had another one over here. This one was into resistance. This one stood aside for. This one over here, that left another opportunity. This trade should have been stopped out. I gave everyone the stop level. Now, always cut your losses short. I said if we resume off of here, if we get stopped out over here and resume off of this support line again, that leads an opportunity for another entry that remains in place. Yes, equities are risky. However, if this prime support line holds over here, that does offer up a buying opportunity. You gotta, if you're looking to take the trades, you're looking for trades that are offering the best risk to reward at the right times. This critical support is one of them. It's not clear whether or not we're going to break down or not. We're holding the trend line right now. Now, if you look at what's going on the Nasdaq, right? We want to see if this is actually, is this a bear flag that we're seeing over here? Is this like a down impulse move? And then is that a bear flag that's developing? I don't think so. To me, it looks more like a channel, right? Stefan accurately pointed that out to us on Twitter. That looks like a channel that we're trading within. And more importantly, this looks like, as you could see, that we closed not only back above this support over here, this channel support, this big horizontal support at 10,894, and also our trend line support over here, we closed above 3 big levels. It looks to me like a possible bear trap has set up over here, right? How bearish is the market right now? Well, it's actually not that bearish. You know, when I say what do I mean by that, let me pull up a chart for you. Here's the short interest, a percentage of the market cap of the S&P 500. Now you can see over here, if this is starting back over here in about February, and as the crisis began over here, you could see as we came into late March, the short interest was about 2.2%, a little bit below that. Right? And you can see right now it's all the way down at 1.9. The short interest is really not so pronounced. Now that all changes. That all changes if we break. I throw out that level for you on the S&P 500. I throw out 3280. If we break below that, you will see a huge amount of increase in short interest. You will see it's a big level to watch over there. So again, coming into next week, we have our levels. It's the downside over here, a break below that. At that point, that's when we flip short, and that's when we're looking for a further extension and on the attack to the downside. What does on the attack to the downside means? That means that we are only looking for short positions. We have a big technical breakdown over here. At that point, until the market recovers, we're looking on the short side. Whether or not we trade all the way down towards 3,000 or not, that remains to be seen. That would be a pain point that I think that we would see some help in the markets. Now, you've seen, when I talk about help in the markets, you've seen the Fed back off all of August and until now. This past week, they had the lowest amount of purchases since the crisis. Why is that? Well, markets were overheated a little bit, right? The Fed did the right thing, stepping off a little bit. They did the right. The question is, how soon do they come back in? That's the question. No one knows the answer to that. We only follow the technicals over here, right over here, we don't have a clear read. We closed right back up at the trend line. If we roll over now and make a lower low and take out 3280, that's a clear signal. If we come up here and take out a higher high over here than the high on Friday, right? That's a clear signal to lean into buy. Or if we hold over here during Asia, don't make a higher high, but then make a higher high during London, that's also an entry signal. You have to be ready to play it both ways now. We've gone to saying we only are looking for months now on the long side, rightfully so. Rightfully so. At this point, I'm saying to you, you should be now looking to play either one side. Both sides are now in play depending on what happens here technically. All right, what about on the Nasdaq, right? Again, we held this important support over here. Horizontal support carries the most weight. Closed above it after this spike down. What does this mean? It means a lot of traders got caught on the wrong side over there on that breakdown so far. Does that mean that we can't roll over here and make a lower low? That's a trigger signal right there. That's a breakdown, retest, and resumption down. That's a short trigger signal over there. But right now it looks like a possible bear trap has developed over here. We did have all that volatility on Friday from the quad witching, right? All the options expiring together. Did that bring some volatility to? Listen, I think it had a lot to do, or should I say mostly to do, when Nancy Pelosi, the House Speaker, said that, you know what, we're actually sticking to our $2.2 trillion demand. And I think that's what set the markets off, right? What did the markets do into the close? Well, they held critical support levels, whether it's this trend line, sloping trend line over here, whether it's the horizontal line, or whether it's this channel that's developing right over here. It held all three of them. Right? So my inclination is that this is a possible bear trap setting up over here. We'll see. We'll watch it. The Dow actually looks to be in the best shape of all three, funny enough, as the Dow ever since the crisis has been the one lagging, right? It was first the Nasdaq going on to make new all-time highs, and after that, it was the Dow going on to make new all-time highs, and finally, the Dow was, it was the S&P secondly, going on to make new all-time highs. And then the Dow finally was able to take out the June high, right over here. This was the June high. It had a lot of trouble as the Nasdaq and then S&P were making all-time high. Then it finally took out that June high, right? It's close to all-time highs. It didn't make new all-time highs. It came close to it. But right now over here, it's consolidating nice ever since it broke out of this channel here to the upside. This broken resistance has held that support once and now twice over here. So not that this is bullish. It's looking the most bullish currently if you look at the past week's price action between the S&P, Nasdaq, and the Dow. All right, what happened with the dollar? Let's take a look at some charts first before we get into that. All right, let's take a look over here. I want to share this with you. This, by the way, if you want to follow along, you can find this on Zero Hedge. These are Bloomberg charts over here. And you could see over here the Fed's balance sheet. You could see over here as their purchases first declined and then stabilized over here. You could see the Nasdaq. And this is actually, when is it? Over here in August. Over here, the first week of August is when I said, now is the time to get neutral. Equity markets are now too risky, right? And we shot up. We continued to melt up over there, but that melt up led to a meltdown. We're not looking for crazy volatility. As a matter of fact, we're looking for clarity. We're looking for high probability trades. Now, over here, you could see as the Fed's balance sheet has just basically flatlined, you can see the market is coming in a little bit right now. What's next? We're going to monitor. We're going to wait and see. People wonder why I don't follow the VIX, right? Over here, you could see the market started coming in. The VIX was rising. This is inverse, by the way, of the VIX. And then you could see late in the week, as the markets this week continued to fall, the VIX volatility also fell down. Why don't I follow the VIX? Look, the reason I don't follow it is because you could just follow the index themselves. I'm able to monitor the index themselves. I don't need to follow the VIX to see what the volatility is. Here you can see over here, this is as the S&P was really selling off, and it's continued to sell off, but the VIX is coming down over here right now. Okay, I could just watch the price action. Look over here. What do I mean by that? Come over to the S&P with me. Do you see these big candles? These really big candles? that's really high volatility. I'm able just to watch, look over here, that's high volatility to the upside and downside. I could tell when the VIX is rising and when it's stabilizing simply by watching the price action on a day-to-day basis. It doesn't add into anything to my analysis, therefore I don't view it. You don't want so many different, in something as complicated as the markets, you don't want so many different conflicting variables. Okay, one of those for me is also volume. Now, someone astutely pointed out, Jordan, you account for volume by the time of day you trade because you're only trading during the highest volume, the highest portions of the day with the greatest volume. Well, that's also true, right? But by going ahead and filtering out any indicator that I don't need, I'm able to focus in on what's most important. What's most important? Price. Price around what? The market structure of support and resistance with the help of trend lines and chart patterns. That's what we do. That's how we stay on the right side of the market. Now over here, there hasn't been clarity. Rightfully so. We're at some critical junctures over here. And now this is the first time I'm saying to you, as we're closing right at this important level, now the downside and the upside are both in play going into next week. It could be one or the other. It's the first time in months that we've opened up both sides. All right. What's going on with the dollar? Let's check in together over here. We could see that the dollar is not giving us any type of, let's say, clarity either. Why is that? We remain in no man's land. This resistance that we were not able to break above after the FOMC on Wednesday, and then since then, we've held this trendline support. Now, this was all resistance, and now after it broke, it's since been support, and we're in no man's land. Okay, until we get a breakout to the upside or back downside, there's no clarity. It's just where we are. What about gold? What's going on with gold? I've been pointing out now for a while this triangle we're in. Take a look at it over here on the Bloomberg chart. You can see over here, you can see clearly that triangle that we've been trading within. This is consolidation. This remains consolidation. Now, I also view this more importantly over here. I have over here that trend line showing that triangle. Now, at the same time, you have this 1900 support over there, right? A break below that level, that negates the bullish structure we have over here in gold. That would, at that point, be a place to get neutral, meaning if you're trading the paper stuff, just get on the sidelines. Don't sell it. Don't sell it. Don't sell it. Don't sell it. Never sell something in a bull market. Gold is in a bull market, right? Gold is in a bull market over here. If we do break this level at 1900, I will be monitoring with you. We'll be looking first over here. We have a little bit of a level to watch. We'll probably clear right through that. It's around 1800 that we'll first be looking for price to stabilize, and a resumption off is where we'll be looking to add. But that's the downside. I'm always looking at the downside at what my risk is right over here. This appears that we're going to break out to the upside over here. A break above 1976 will confirm the breakout, and if we are able to break above, that could set up a retest of the all-time high on gold. Silver has a similar structure, and let me clean up that chart. That's where we're looking to buy if we break this important level over here of $26. You can see it's the same exact pattern that's playing out on gold. You're in this huge impulse up. After that huge impulse up, you're consolidating in that triangle over here, right? This probably is going to lead to a breakout to the upside, but you always want to watch out where you're wrong. On the case of silver, that's right over here. It's a break of 26. At that point, get neutral, get on the side, wait to buy back at a lower level. The first two levels under that are 24.50 and 23.30. What about Bitcoin? I have to say Bitcoin has been acting ultra bullish. What do I mean by that? On Wednesday on the FOMC, you saw the huge volatility across the markets. Bitcoin was actually the most stable. By the way, markets have been selling off. What's Bitcoin doing? Well, I see Bitcoin going up, right? I told you that correlation was going to break. During a crisis, specifically a dollar crisis, you have everything correlated down to almost 1. We're not anywhere close to having any type of dollar shortage problems at the moment. The Fed overreacted, okay? What we're seeing here is the stock market, which got ahead of itself. It became risky. I rang that bell over and over again. Equities are risky, equities are risky, equities are risky. right? Remains the case, right? Best, what have I said the best trade is? Bitcoin. Look what Bitcoin's doing, breaking that correlation right now. And you could see over here on Friday, even when the market sold off, what's Bitcoin doing? Bitcoin over the weekend so far, right, is up 1.6%. Bitcoin remains and looks to be very, very bullish. Now, listen, this correlation is not really going to break until we get into the later part of the first quarter of 2021. That's not far away. That's not far away, but I do expect October and November are going to be extraordinarily bullish for Bitcoin. Let's keep watching and monitoring it and see what's going on. Right now, I continue looking for this to provide some resistance, this trend line to be some resistance. But I think we consolidate under it. That will be very bullish, leading up to a breakup, regaining this broken trend line over here, which this was the start of the bull market. Once we regained this held as support until we crashed below. All right, everyone. I just really felt, do we have anything else to look at before I get off over here? Let's take a look over here. This is just a look at the Bloomberg Dollar Index. You could see over here, no man's land. This is that trend line support I'm talking about, right? And that's that horizontal resistance. Let me show you so you understand what I'm saying when I talk about that. That over there, the bottom portion, that's that trend line support, and that's that horizontal resistance. It's no man's land. You could see all this area, no man's land. What else? That's all. That's it. I think that's it. By the way, one other fun thing to look at over here, and this is just for fun, nothing more than that. This is comparing the Dow Jones back during the Great Depression over here, the large sell-off following by the recovery. This went on, and then all of a sudden we started making lower and lower lows. Is it appropriate to compare the two? Well, I don't think so, but we're going to keep monitoring it, and we'll see. We'll see over here. There's a big difference. There's a big difference, as you can see over here. When I say there's a big difference, if you go back to the red line, which was back then, you could see when price rebounded right over there, it was into that resistance, and then it sold off. You could see over here on now, which is in blue, when price rebounded into that resistance, it actually broke above and is sitting above that broken resistance, that support. The two don't really align. It's just for fun. And speaking of fun, the markets are amazing. I absolutely love I have a great passion for the markets. I love sharing what I know about them with you all. I love the community that we have created. It's just absolutely fantastic. I thank you all for it. I'm here to help do my best to keep us on the right side of the market. I will see you all Monday. Have a wonderful weekend, everyone.